Hey, well, welcome back to Overnight Accountants course on Realtors and Reducing Classes. Now, this section is going to begin the home office deduction. So, if you're taking this course as a standalone course, we probably tied it with the auto expenses and the home office deduction together. You're going to notice this is a fairly complicated topic, particularly if you're going to be claiming actual expenses of the home office. But as we said here, this section is going to be out of order. So in general, we're going to be following Schedule C line by line, but we did pair this with the auto expense because they are so interrelated. And again, our purpose of doing this is really to help you maximize your auto expense. I'm really not real interested, for most of you, you're going to notice that this is really a relatively small deduction for most of you in the real estate business. Now, some of you, it may be a lot higher if you're claiming actual expenses. However, it's going to be a relatively small deduction for most of you. And the primary reason we want to get that home office is really to maximize the number of miles that you can claim as an auto expense. In order to do that, you have to have a qualifying home office. Now, the home office, if you're claiming actual expenses, it's going to be claimed on what's called Form 8829. This is expenses for business use of your home. However, well, here's an example of it. This is what it looks like. Now, we're going to go over this actual expenses in a whole separate section. There's actually a few sections of this course devoted to it. The good news is, for those of you who want to go through that part of the course, it will help you maximize your deduction. For those of you who aren't really interested in it, you just want to claim the simplified method, which we'll discuss in this section. The good news is you can skip that. It's probably going to be like an additional hour of training, but it'll be worth it for those of you who want to claim your actual expenses. Now, when you do the home office, when you claim it, it is actually claimed on line 30 of your Schedule C. So if you're doing actual, it flows through from your actual expense form to line 30 on your Schedule C. There are two methods to claim this deduction. One is called the actual method, which is what you're going to use Form 8829 for. And then there's a simplified method, which we will actually discuss in this section of the course. Losses are limited with the actual method, meaning the home office really you can't use it to claim a loss. Now, you can with the actual method for certain items. Primarily, it's going to be items that you can deduct on Schedule as an itemized deduction on Schedule A, and that's primarily going to be your mortgage interest and your property taxes. So they can help you generate a loss from on Schedule C, and any loss remaining can be carried over. However, if you use the simplified method, it really cannot generate a loss, and you cannot carry that loss over. The actual method, which again we'll discuss in several sections, it's fairly complex and it requires some really intensive record keeping. It also requires you to claim depreciation, so you have to depreciate your house, which is fairly complicated also, and you're also going to have to do some cost proration and allocation in order to accurately claim the actual expenses for use of your home. The simplified method, on the other hand, is, well, it's simple. It's just like the name implies. All you really need to do to claim this deduction is really have proof of a qualifying home office, and that's really the benefit of the simplified method. So as we move forward here in this section of the course, let's talk about when can you deduct a home office. When do you have what's qualified, we'll call it a qualified home office. So when can you deduct it? A home office for tax purposes is going to be a room, an area, or even part of a room that is used regularly and exclusively for business. So what do we mean by that? Regularly means consistent and ongoing use. It is used, well, regularly for your business. Now, exclusive, and this is what limits the deduction for most individuals, and is also one of the primary reasons that the IRS denies this deduction under audit, is that it has to be exclusive, meaning the area can only be used for business. As you'll see here, I have only in caps, and it is underlined because I'm trying to emphasize that part of this slide right here, or these slides, that can only be used for business, have a qualifying home office. And finally, it's a room, area, or part of a room used regularly exclusive for business, and it must be your principal business location. Now, what does that mean? Because for most of you, it's really not going to be where you earn most of your money. And IRS definition is, one of the definitions is where you really earn your money. Where do you make your money at? That's going to be your primary business location or your principal business location. However, there's a workaround for realtors, which we'll discuss in a second. Now, your principal place of business can be an area of your home where you regularly meet with clients, and it's only where you meet for clients. So for most of you, that's not going to qualify. You can see the circumstances with we have many clients that say they're chiropractors or even they're doctors that work out of their home, and they have a part of their home that is actually, it's an office. It's only used for businesses where they meet clients. They even have a little waiting area, whatever there, and that's where they regularly meet with clients, also where they make most of their money. So, or you can have a separate structure that is only used for business. Now, some realtors have that. Some realtors may have an office that they actually have set aside on their land that they use for business. This course really isn't going to discuss that because it's so rare. However, I'm supposed to know that it can be a separate structure used only for business, and you could also have other locations that are used for business, and it would still qualify as a principal place of business. But what is really going to help most realtors out, it can also be where you conduct management and administrative duties of your business. So administrative and management duties if you have no other location to perform these activities. And most of you, even if you have an office at your broker's office, maybe you have a cubicle in there or a place where you can work, or maybe you even have an office, that really, you can still claim the home office potentially if it's where you conduct most of these administrative duties is at your home office. So what do these duties include? They include scheduling appointments, being on the phone, scheduling appointments, keeping your calendar, performing your research for clients, maybe on the internet, uploading your multi-listing services, searching for homes on the internet for folks, doing whatever kind of research you need to do for your clients. It's also possibly a place where you do your filing and you perform your record keeping, your keeping of records. Also could be where you perform your bookkeeping, and maybe it's where you pay your bills or do your banking, reconciling your business checkbook and whatnot. Those are all examples. It could also be a place, if you even outsource these services, maybe you have an accountant that handles your books or whatever, but you got to manage these services from somewhere. It could also be where you manage others who perform these duties for you. So it's really a pretty broad definition for what administrative duties are. Now, as I said, if you have more than one business location, where do you conduct most of these activities is what I want to ask you. And if it's your home office, guess what? You can claim the home office deduction. You have a qualifying home office if you use it regularly and exclusively for business. Now, you must be able to prove regularly and exclusive use for your business. And what I'm saying by that, it must be real. You just can't at the end of the year decide, oh yeah, I've got an area that has a desk in it. That's my home office. Please don't do that. That really is not a qualifying home office. It must be real. You must be able to prove regular and exclusive use. Here's a few notes on exclusive use I want to make you aware of. The area, as I said earlier, can only in caps be used for business. A kitchen table, use your kitchen table for business. Maybe you do that. However, that does not count if you also eat there, or if anybody eats on that kitchen table, or even if you use it once a year for Thanksgiving. That's not exclusive use. If the kids use the desk that you claim as your home office, or the room that you claim as your home office, if you have, say you have a computer in there or a TV, if they use it to play video games, or they do their homework at that desk, or that in that room even, that you're claiming as your home office, that's not exclusive use. Let's say you have a guest room that you claim as your home office and it has a bed in it. That's really a sign that that whole room is not your home office. If the in-laws stay there once or twice a year, you have somebody over and they use it, that's not exclusive use. However, let's say that kitchen we discussed earlier, instead of your kitchen table, you have an area, part of your room that is used as, or part of that kitchen that has a desk set up, and it's only used for business and it's used regularly for business. That area can be exclusive. That desk and a few square feet around it, there's your home office. You can still claim it. Let's say in that guest room, you have a desk and a filing cabinet, and it's only used for business. Now, the whole room doesn't qualify because it's a guest room, but if you only use that desk in that area, a few square feet around it, guess what? You have a home office too that is exclusively used for business. So here's from a publication that is used for business use of your home. Here's a little example. We should have this in the resources if you want to print it out. It's kind of a flow chart to see if you have a home office or not. And really I've highlighted the manner in which most realtors like yourself are going to be able to claim this deduction. And as you see here, you're not an employee, you're self-employed, regularly exclusive use for business, it's principal business location, yes, boom, you're allowed the deduction. So that's the path most of you are going to use to get the home office deduction. So now let's talk about proving your home office deduction. If you have it, that's not good enough because you're going to need to prove it, or you may need to prove it to the IRS at some point. So what do we want you to do to make this kind of audit proof or bulletproof as far as the IRS goes? Remember, in taxes, the burden of proof is on the taxpayer. An auditor, if you are audited, there's a good chance they may want to see your home office. So you want to make sure you have that. Keep the office clear of personal items. Good way to do this. If you have kids' toys in there, if you got say your laundry in the guest room that you say is your home office, or in the office area, if you have an ironing board in there and you got laundry in there, you're obviously using it for something other than business. If there's kids' toys scattered around, the kids are playing in there. No longer your home office, no longer exclusive use. Doesn't matter how regularly you use it, you just lost a deduction because of that. Keep the office clear of personal items, particularly if you're having an IRS agent over or an auditor over to look at it. If you're claiming a room, it can only be used for business. No toys, no bed, etc. As I said a moment ago. If you're claiming part of a room, only that area that is used for business counts, so it can be part of a room. Now, a good way to prove it, there's a couple ways. You can take pictures of the home office area, save them, put them with your tax materials. Remember, it's important that you do this because use may change over time. A couple other items I don't have in the slides, but make sure your letterhead, if you use your letterhead, it has your home address on it, not a P.O. box. Also, your business cards. You may not want to give your home office, your home address out to everybody, but if you do that, it will give you a little more proof of your home office. You don't have to do that, but the more proof, the better, is that it is a place where you do administrative duties. On your checkbooks, make sure your checks have your home address on it. Again, you don't have to do that. If you're worried about privacy issues, you don't want everybody that you ever showed a house to know where you live, I definitely understand that. However, the more proof, the better. So the IRS has 3 years from the time you file your return, generally, to audit you. So the use may change, and remember, the burden of proof is on you to be able to prove this potentially years later. You may even move from this house to another house. You may still need to prove that deduction. So do your own due diligence and make sure you have proof for that. If you have a professional doing your taxes, they may not even ask you this. They may just ask you if you have a home office. They may not put proof in there or even mention what I'm telling you right now because they're busy. So anyways, that's it for that part of this course. Now let's continue here. I'm going to do an overview of what you can deduct now. What can you deduct? An overview of the home office deduction. There's 2 methods. We've mentioned both of them, but those are the simplified method and the actual cost method. Now you can switch between these 2 methods each year. However, when you make that choice, when you decide you file that tax return, use a simplified method or the actual, you cannot go back and change it later. If you amend a return for another reason, you cannot change, at least how the laws are right now, you cannot change from one method to another. And those laws are pretty, it's been around since they created the simplified method. So they're probably, no matter when you're taking this course, it probably still rings true. Now, if you have part your use of a home office, say you move, or maybe you're new to real estate, you're going to have to prorate for part your use. We'll discuss that in a little more detail a little bit. Deduction on Schedule C. There are certain items that you can deduct on Schedule C that are related to your house, not directly related to your house, but there is items in your house that you can still deduct even if you have no home office. Or you can deduct even in addition to claiming the simplified method. And let's just say you have a second landline in there that's only used for business. You can still deduct that second landline. You can't deduct the first landline ever coming into your home. Maybe you have a business computer, fax machine, office supplies, and office furniture, and maybe you don't have a qualifying home office, but you can still claim that business computer. Maybe it's used 60–70% for business. You can claim it as a deduction. You may have to depreciate it, which is another part of this course. But office supplies, a lot of folks forget this if they don't have a home office deduction. You can still claim the office supplies, office furniture, items in your office. Now, they may be limited on the amount of use that you have. However, you can still claim that deduction. Also, it's important to remember your internet. Now, if you have a household of maybe 4 people and you're using that, I know realtors use extensively, use the internet, email, you're doing your research, maybe several hours a day and they're using the internet. You can claim a reasonable percentage of that internet use on the Schedule C, not as a home office deduction, but it really would be related to utilities or other expense. And remember, you can also claim ordinary and necessary business expenses related to your business. The home office deduction is really about your home, utilities of your home itself, repairs and maintenance of your home, and those sorts of things. It really doesn't include other items that you use in your business that are only indirectly related to your home office. So I hope that makes sense. So as we move forward here, the final part of this section, we are going to discuss the simplified method of claiming a home office deduction. The good news for many of you is if you're not planning on claiming actual expenses, you can skip the actual expenses part of this course. That's a fairly long segment of this course. It may be over an hour in itself because it is fairly complicated. If you're claiming the simplified method, it is a relatively simple calculation. It was introduced in 2013 by the IRS for several reasons, but among those, I think part of it was they got tired of auditing everybody that had a home office. Not all of them, again, but many people, because there's so many mistakes being made on the home office deduction, because the only way you can do is claim actual expenses. And if you look at the 8829 form, which we'll discuss, can be very confusing in itself. And honestly, 20 years of doing taxes, I don't want to tell you this because for those who do your own tax return, I don't think I've ever seen one that was actually completely done correctly and were items that were either deducted that shouldn't have been or items that were missed that could have been deducted. So IRS realized that this is kind of a mess. And so in 2013, they introduced this simplified method, which has really been helpful for a lot of people. And remember, the primary reason of doing this is what? To get you the auto expense deduction, to maximize the auto expense. You don't have to have any record keeping other than proving that you actually have a qualified home office. Again, because it's just a simple calculation. You don't got to prove one thing. That makes it a lot less risky during an audit for you. And it's going to be best, it should be a higher deduction if your office is relatively small, relative to the size of your house. It also be if you have low expenses, and it also for many of you, you got better things to do with your time than track every little piece of paper related to your house or every little receipt. So it's best if you're not interested in or you're not good at record keeping and tracking all your home-related expenses that will come into play if you claim actual expenses. Another bonus is no depreciation required. You do not have to depreciate your house, which is a big area where mistakes are made, not just the home office. The depreciation is one of the most complicated areas. I don't care if you're using your own software or if you have a professional do it. Depreciation in the home office, things carry forward year after year. It is really often creates a mess, particularly if you do it yourself. All right, you do not have to reduce mortgage interest or property taxes on Schedule A, meaning you can claim a simplified method and still claim, if you itemize, this course is not about itemizing deductions, but you can still claim all of your mortgage interest and your property taxes on Schedule A. Now, if you use the actual method, you're going to take a percentage of that mortgage interest and property taxes and claim it as an indirect expense on the Form 8829, and then you have to subtract that out, and this is a mistake made by many taxpayers, particularly when you prepare your own returns. You have to deduct what was deductible on the 8829 from your Schedule A. It can get very confusing. As we said in the introduction, it cannot create a loss, so you lose a loss completely. So deduction is limited to the profits before the deduction. So say you have $500 in profit before the deduction. You have a $1,500, you have a 300 square foot home office, which entitles you to a $1,500 deduction. You're only going to be able to claim the $500. And the rest, there's no carryover. You lose it forever. Hopefully for most of you, you're making a profit at your real estate business, and that's not going to come into play anyways. All right, we deducted on page 1. So how do you claim it? Page 1 is Schedule C. It's going to be claimed on line 30. We'll have a picture here in a few minutes for you. You're allowed $5 per square foot up to 300 square feet. So it's fairly generous. I've done a lot of actual expenses for folks to go through all the work, and you ask about all the expenses and everything, and their deduction is really oftentimes the size of the house and their expenses related to it. It's not more than $1,500. So it allows you a $1,500 maximum deduction, no questions asked other than proving you have a qualified home office. Now, one of the only places that's really complicated on proving you have a home office is if you use it part of a year. If you're new to real estate, or say you moved into a new house or using it part of a year, and you say you started in the middle of the year or whenever you might have started, you have to average the square foot for the year. And that's basically because of the way it is reported on the Schedule C. So let's do an example of this. Let's say you start in September and you're in business. You start in the business, your real estate business in September, and you were in business for 4 months. So, and you used 300 square foot of your house or more, but you're limited to 300 square foot for 4 months in your business as a qualifying home office. The way you do the calculation here is you take your 300 square feet times 4 months, you multiply that together, and then you divide by 12. So, which is 300 times 4 divided by 12, that's going to be 1,200 square feet divided by 12 is 100 square foot, so your deduction is going to be 100 square foot or $500 because you used it part of the year. It's relatively simple, but you still have to report it. Even though you have 300 square feet, it seems kind of unusual. It's just the way the form works. You're only going to report 100 square foot of it. And that's really the only way to report it on the return to do the calculation. So here's where it shows up on the Schedule C. If you're using your own software, you may need to find this in the software. However, you're probably not doing your return by hand. But I just want to make you aware of where it's at. So you can see here, total square footage of your home, you need that. Even if you're doing a simplified method, you want to report that. And then the area that's only used for business. And then there's instructions here which basically say if you use a simplified method, up to 300 square feet times $5. So that's it. And that is actually it for the simplified method of reporting your reporting the home office deduction. As you can see, it was relatively painless. Now, if you're interested or if you're claiming actual expenses, or maybe you've done it in the past, please take that section of the course. However, if you know for sure that you're only going to use the simplified method, you could probably skip the next 3 or 4 sections of the course. Of course, now since you purchased it, you do own that section, and you can review it at any time to to learn about the actual expense if it's something you're really interested in or thinking about doing. So thanks again, and I'm Brett Hirsch, and we'll see you in the next section that you decide to watch.